Hello guys, welcome to the Trading Parrot. Today is the FOMC meeting and we still have a chance to break that 70k. And I want to talk about what could change our chances of breaking above 70k in a matter of days and turning that into possibly a matter of weeks, if not months. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel, hit that notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below. Those two things are telling the YouTube algorithm that this content is worth watching by more people. So thanks for that. What you're seeing here is the daily RSI. And you can see that after this explosive move, the breakout that we have mid-July, since then, we have lost this support from the dotted yellow trend line that became resistance, and we are starting to form a pretty confusing pattern here. On one side, we have something that looks like a head and shoulders with a target of an RSI 44, and on the other side, this looks like a bullish flag that if it managed to break from here, could take us to an RSI of 86. And I think the key is precisely on the support that we've been testing for almost a day, which is located at the RSI that I mentioned yesterday, 55. When we were coming back down in here, I said that we need to close the daily RSI above 55. Make sure that you watch the video from yesterday. And I said that if we close below 55, it's pretty much guaranteed that we go to the target of 44. That's given the height of the head in this head and shoulders pattern. Well, we got lucky, we closed above 55, and we have a very humble move above support. That, when we look at the price, can be clearly seen in the RSI level that we left yesterday, which coincides with that 55 in the RSI. So far, we are holding that, and now you can see clearly what I mean, but we are pending from a thread to go into the next target, which is located at this trend line, which is a very important trend line. We need to zoom out a lot to understand why it's such an important trend line. That level is located at 63.2k, and it's not just important because of the trend line, but also because it's acting as support and resistance multiple times across the full range of Bitcoin since the all-time high. And I'm telling you, I don't know what's going to happen today. It fully relies on the reaction right above this level of 66k. If we see now that we start challenging the point of control and we can continue going higher, we might get that next attempt that we've been talking. But this time, the resistance is no longer located at 70k. Now it's located at 69k. And you can see coincidentally that there's been 800 in orders at 69.2. The market maker is not stupid. They've been monitoring this resistance and accommodating as it comes down with time. You can see how the price action is curving up and leaving loads of wicks around here. This is still a bear flag that could come back below it, but there is an opportunity here for producing a reversal. The price may want to go for this fair value gap at 67.6, or may want to go and consume this full fair value gap at 69 and get potentially rejected with this order block that now starts from 69.2. You can see how we have the narrative for both cases. So we need to let now the price tell us what comes next. And typically I get that information from the 4-hour time frame. But unfortunately, this move in here is very difficult to judge as breakout to the upside because there has been literally no touches of the trend line. If I place the trend line like this was like a breakout to the downside. If I place it on this pivot here, then there is no touches. If you compare it, for example, with this breakout, you get many more touches and you get a breakout clear at 36. But in this area, it's such a messy move for the RSI. All I can tell is that now we're touching resistance in there, but there's no clear path of what can tell us that there is a reversal here going on. It's not really helping. What might be helping is the fact that this move to the upside in here is right above the top pivot, which should be acting as strong support. But notice that the previous time we went to the final pivot located at 63.5. 63.5, 63.3 is the number that we are talking when we refer to that trend line, to this horizontal support on the daily. So it is a meaningful number as well. When it comes to the CME gaps, 2 out of 3 out of the way. The first one, it took just a few hours to go away in a very aggressive reversal to 68.8. That was on Monday. And on Tuesday, we took out the second one that we were looking at on Twitter. Make sure that you're following me. My handle is Trading Parrot. And we have one outstanding that is here at the bottom from 57 to 60K. That is still pending. It's less likely that we take it compared to the ones that we just took that were just next to the price. But if we started seeing that we lose, number one, the 66K level, and then we head to this trend line at 63, and we also lose that, to me, it will be more than obvious that the next target will be to take the CME gap. At this point in time, it's still difficult to assume that we're going to take it because the price has been respecting a bullish structure so far. We have higher highs, higher lows, and even though the structure seems to be curving for a potential breakdown, it still hasn't done it. And this curving and all the bearish divergences that come with it is the natural reaction that you get when you are confronting such a massive level of resistance that we have respected for almost half a year. You can clearly see it in this megaphone pattern. And the key is not necessarily to break it in just one go, but the first and second potential reaction to it, if you stick around to the top levels and don't go to the lower end, that is what we need to increase our chances to eventually break it. If we start getting too far from the top of the range, let's say entering and closing within or below the bull market support band that starts from 62.5, you pretty much guarantee yourself that next week we are going to the bottom of the megaphone pattern. That is lower likelihood at this point in time just by judging this price action, but it's still on the table. And all it takes is for the price to tell us here that there is enough weakness. Looking at the distance to the areas of more liquidity on trading different, we can see the most significant areas in the 4-hour chart. And if we go into scalping, right now the most significant one is at 65.2. Let's zoom out a little bit further. This is telling us that there is a potential to come here and grab this 64.6 because compared to what we have right above us, this is a lot more attractive. This liquidity started creating from the stop losses placed at that point through this period. And then with the new bounce in here, we started accumulating quite a lot additional. If we start zooming out enough, those levels become less significant relative to what we have at 70K. So one potential outcome is for the price, yes, to come to these levels, take this, and then continue to the upside. But I guess all of that is going to depend a lot on the outcome of the FOMC meeting today. Typically, approaching a FOMC meeting with negative price action tends to revert during the FOMC meeting, and when the price action is positive approaching the FOMC meeting, it reverts to the downside. And since we have come from 70K to the downside, we could say that potentially we can go higher. But if you look at the daily, we have had quite a decent run to 70K, and we are just holding there with a bullish structure. FOMC do the opposite and affect this structure, turning it into a bearish daily structure. For that, we will have to see how the meeting later today affects the general markets as well. Now, a little bit of hopium here. You can see that July tends to be better than June. August and September tend to recover even further. And then October is still a bullish market, typically in average for Bitcoin. July so far is 5% up and August is just around the corner. October, it's been 5 years in a row being positive. You can see how people are starting as well to build expectations on this last bounce here of liquidity. of a potential reversal to the higher end as well. Benjamin Cohen is quite bearish on the expectation of the rate cut when it comes to the altcoin market, given the argument that the previous time there was a rate cut came in at the time that the altcoins would have had a second capitulation. You can see the first capitulation in here, all the run before the rate cut, and when the rate cut came in, there was another capitulation. So if history is going to repeat, we should expect around here in September, maybe another capitulation. Most people wouldn't agree with this. Most people are quite bullish for September, including myself, but I like to bring different ideas to the channel so we can have a healthy discussion as well. Weeks ago, I mentioned on Twitter that Nvidia was about to revert with that massive red candle that it printed at the top, and my worries about Nvidia dragging the rest of the market down, since Nvidia was responsible for pushing the whole market up as well, specifically when it comes to the Magnificent Seven stocks. And you can see how that play out perfectly. These are all the drops from the Magnificent Seven, and in total they wipe out 2.6 trillion of the market from precisely that candle of Nvidia. We've been discussing in the channel how the Nasdaq lost the momentum, the S&P, and I think now is the time to start looking for either new support on the general markets and a reversal to the upside, or a potential massive break of the market, potentially producing even worse results than this. Guys, I'm currently hosting a position airdrop on Bybit, giving $500 for free to trade if you trade with just $100. There's a link at the top of the description with all the instructions, and if you use my referral link to open a new Bybit account, you can claim up to 30,000 in rewards. Join my Discord server to have a look at all the strategies that are published. Join the discussion. For many of them, you're going to need an observer tier. Some of them are going to require VIP. But don't worry, because if you are planning to use your Bybit account to trade with bots, head down to Bybit Perks and connect your Bybit UID with our Discord server. Once you do that, that will validate that you have used my referral, and then you can use it to claim 70% off any of the TTP tiers. That's going to unlock hundreds of different indicators that you can use to help you navigate the market, trade with bots. I'll see you on Discord. Thanks so much for watching. Bye bye.